Good afternoon, it's Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. If you'd like to know more about these services and free products, just visit CFDs.com. Okay, a wrap up of the European markets, folks. Interesting. Again, whipsaw city. That's probably the best way of explaining it. As we can see here, European markets all closed in the red. After the Asian markets obviously did manage to hold on to the gains, and US markets were quite strong the day before. Okay, well basically what happened, we actually had a report overnight with regards to the Greece situation, obviously IMF walking out, so on and so forth, which obviously was denied, well not denied, it was certainly retracted later on during the day. And there was some counter statements again and counter reports, so the whole thing itself certainly does seem very confusing. But so far, obviously overnight, given the fact that we had the IMF walking away, there was potential talk of a obviously there was for the first time there was potential talk of a default. Okay, and that obviously sent the shares in the opposite direction. Now there were statements towards Grexit and anti-Grexit and pro-Grexit and anti-Grexit, obviously statements all day, and it's the uncertainty I think that towards the end obviously hurt European equities, especially given the fact that the day before the European equities had staged quite a significant rebound, with the DAX obviously hitting the 11,400, 11,500 level, only to give it all back today. So interesting scenario, okay, today. But let's just try and sum it up from a chronological point of view. Okay, so in the morning we came in with the Asian markets obviously ignoring the sell-off or the news flow with regards to Greece, given the fact that there were comments after that the IMF hasn't totally abandoned the Greek obviously resolution process, and Miss Merkel did come in and give a a pro QE statement with regards to the euro being lower, or attempting to talk the euro lower, and obviously reassuring everybody that they are attempting to come to some sort of conclusion. And so far, I mean, given the fact that the actual the news flow so far, I mean, the latest is that IMF and ECB officials to join Greek talks in Brussels on Sunday or Monday. So again, Greek officials say that the report of a 24-hour etc. deadline. So again, that's a negation of the previous comments with regards to Greece. Greek government official denies reports that EU has been discussing Grexit scenarios. So again, the Grexit scenario has been declined or negated or denied. So overall, a lot of noise. Okay, hell of a lot of noise. But if you look at the final conclusion is what? That they are all working together to come to some sort of obviously resolution, and that's generally overall net positive for the markets. That's how I interpret it. Okay, especially given the fact that the Asian markets interpreted it as bullish, so therefore one would certainly interpret it as bullish as well. Now the economic data out of the US came in stronger, with the consumer sentiment data or consumer confidence data coming out obviously stronger than expected. So Michigan consumer sentiment coming out stronger than expected. The producer prices came out in line, although the month-on-month May actually beat. Okay, industrial profits in the Eurozone actually fell, and we had wholesale prices obviously in Germany coming out slightly better than expected as well, which obviously was bullish the euro. But Ms. Merkel did attempt to talk the euro down, so therefore that was slightly a negative tone. Okay, so let's try and understand what's happening here now. So overall, net, there was no economic data that really pushed the markets either side. It was all about Greece, and that certainly seems to be affecting sentiment and affecting momentum. And given the fact that the latest news flow is that they are attempting to come to some sort of resolution or agreement and sit down, and the IMF still is on board, then that should be interpreted as being bullish from my perspective. Okay, if that's bullish, then let's have a look at the actual technical picture now, going into Monday, obviously trying to wrap up this week's trading. So let's start with the German DAX, given the fact that it's the leader in Europe. Actually, let's start with the Euro USD first. I think currencies first, and we can work towards the bond market. So if I let's start by taking a look at the Euro USD and looking at the inside there. Okay, so you have a potential. We did have a initially we did have a potentially H&S formation on the Euro USD, only to reverse. Okay, and now Looking at a daily chart here, obviously we are finding resistance at this 1.1385 level. The market certainly seems to have held that level and is unable to propel any further. Okay, on the upside, given the fact that stronger US data predominantly. Okay, the actual weekly chart does obviously paint a different picture. So again, one needs to be open-minded. I mean, if we do get a Greek resolution, then obviously this could certainly propel the Euro USD higher, and the uncertainty could be removed from that perspective. Also, if inflation data starts ticking up, given the fact that the economic data out of the Eurozone still, given the fact that the Euro industrial production data failed to meet expectations, then that certainly argues towards a QE, obviously, a path, and therefore, obviously, negative Euro, especially given the fact that Miss Merkel is attempting to talk the Euro down today as well. I think the whole aim is to talk the Euro down, because obviously that causes the bond prices to obviously move lower, move higher, and obviously yields to move lower. Okay, so that certainly needs to be observed, but so far, from my perspective, obviously we did have this thrust higher and reversal quite impressively. What seems to be happening at this very moment in time is that whenever there's a risk-off scenario, i.e. a potential talk of a Brexit and so on and so forth, the whole QE trade gets reversed and the Euro USD moves higher, and that causes obviously European equities to move lower. So there's that inverse relationship. So regardless of what we interpret, I mean, obviously a Brexit scenario should overall be net negative for the euro, but because of the QE nature of the markets, it's considered to be net obviously positive for the euro, given the fact that it's a rewind of the QE scenario. Okay, right. So the 60-minute chart of the Euro USD, absolute mess. We did break out, obviously, only to reverse back. This is a trade that I was stopped out when I took a short at 1.1190, looking to play this bear flag scenario, given the fact that we were in a bearish trend and given the fact that the H&S formation, as you can see, was triggered, only for the market to reverse in the opposite direction, given the talk of this Brexit and so on and so forth. Okay, so at present, how do we interpret it? Okay, so we have horizontal resistance here. Okay, so that's the only scenario that I can see at this this current juncture anyway. Okay, so you do have a diagonal trendline resistance obviously holding as well on the Euro USD at the 1.128 level. So that certainly needs to be observed for now. Okay, so again, horizontal resistance, given the fact that weaker EU data, obviously given the fact that we've had Miss Merkel attempting to talk the Euro USD down as well, so we need to take that into consideration. Okay, if the Euro USD obviously is into resistance, as you can see here, then that obviously bodes well for bodes positive for European equities. Now let's have a look at the Euro bond, see what the actual bond market is doing. Okay, so Eurobond itself at present, as you can see here, after the bullish engulfing candle yesterday, given the reassurance, etc., that and the yields obviously dropping, we did have the actual Athens Stock Exchange down 6.5% after being 7.5% up yesterday. So again, that's a cause for concern, and it's all about the yields. Obviously, as a fair increases, obviously so do the yields. So again, it's something to observe. But given the fact that we had a consolidation day, and also given the fact that the bonds, as you can see here, have been sold off quite substantially, this is your trend line to follow for now, and that's something that I'm going to be observing. Okay, and again, a bullish close from my perspective. It's closed at the top of that green candle, it's consolidated, and certainly seems to be bullish from my perspective anyway. So we have an inverted head and shoulders formation in the bond, German bond. What does that mean? That means that obviously there's an inverse relationship in the bond. That means that the Euro USD will be looking to potentially go lower, okay, and the actual equity market will move with the bond higher. Okay, so again, that's a potentially bullish sell. Okay, potentially bullish sell going into Monday, given the fact that we held the highs. Okay, again, impressive consolidation, digestion, call it what you want. But from my perspective, that certainly is a bullish scenario going into Monday, and that's obviously bearish for the euro. Okay, and especially if a Greek deal is done, that should certainly help. Okay, right. The equity market now, given the fact that we've covered the currency and bond markets. Okay, so let's go to our daily chart of the German DAX. The German DAX, as you can see here, has held that pivot low from this diagonal trend line. Okay, it's consolidated, as you can see, after the bullish engulfing candle, 2 thrust days, 1 pullback day, given the uncertainty and obviously counter statements and contradictory statements out of the Greek situation. But so far as we know, it is considered to be bullish now. Now this is a pattern that I actually put up for everyone. So this is the inverted head and shoulders formation on the German DAX. We've held the 61% right shoulder support. We're putting a bullish engulfing candle, provided that candle holds and is not negated going into Monday's trading, obviously, then that would obviously be considered to be bullish. We should obviously thrust higher and start the reversal. And that's what I'm expecting, given the fact that the euro bond obviously is showing an inverted head and shoulders formation too. Okay. So bring up the chart. As you can see here, we close this gap level. As soon as the market closed a gap on the German DAX, then all of a sudden we had quite a powerful reversal. And again, its statements were very, very contradictory in nature. And as a trader, I mean, when the news flow is constantly changing every 5 or 10 minutes, it's very hard to get a grasp of which way this market is going to go. Okay, so again, we are in this down. Obviously, you've got a bearish channel or bearish trend line there. Okay, so what we're doing now is connecting the pivot lows. Nothing really of any substance so far from a technical perspective, other than the fact that we had this break of this bearish trend line, as you can see here. And we broke out of this bearish falling contracting wedge pattern with good volume too. Okay, so from going into Monday's trading, that's all I can see on my screen at present. Provided this pivot low holds at 11,070, the bias would certainly be on the bullish side, and that's certainly something to observe. In terms of technical patterns, that's probably the only pattern I can see, although that is your gap level. So again, that is quite important when the market opens and closes, as you can see here and here. So they're two key levels on the upside. So again, in a downtrend, impressive obviously sell-off in a downtrend, but we have broken out of this falling contracting wedge pattern. Your resistance levels will be the key one at 11,250, which again coincides with this gap level. Previous support equals resistance, and also this diagonal trend line as well. Okay, given the fact that if you do go lower, then you are looking at 11,070, which is a pivot low support. If that cracks, then obviously the bearish not more than likely be, given the fact that there's no potential deal on the eurozone. So again, that certainly needs to be taken into consideration too. Okay, that's the scenario that we find ourselves in a 10-minute chart. Now let's cross-reference that with the French CAC. See if we can obviously see any type of pattern there that's familiar. Looking at a daily chart. Okay, daily chart, a gap fill level or gap fill resistance certainly held, so that needs to be respected for now. Okay, the 60-minute chart, we do have, well, we had the possibility of an inverted head and shoulders pattern, which I was expecting today. But given the fact that the extent of the sell-off was quite substantial, I mean, went as almost up to 75%, slightly worrying sign. Ideally, you'd like to see at least a 50 to 61% right shoulder. So, but given the news, it certainly is one can forgive, given the fact that the uncertainty in the statements, counter statements. Now, if this bullish engulfing candle holds, and obviously the bias is bullish, if we fail to break that hole up for a bullish engulfing candle, which is 4,850 support, then you are looking at potential double bottom back again at 4,800, 4,785, and then the downside could certainly be open, or further downside could certainly be open as well. Remember, we do have the unfilled gap at 5,181, so again that will always act as a magnet for a potential thrust or a move higher. Okay, in terms of the French CAC. Okie dokie, right, that's basically your 60-minute chart. Now go to a 10-minute chart of the French CAC. Again, obviously we broke out, we had this HNS, which is a real botched up HNS really. Once we broke out there, obviously the bias was bearish, given the fact that we had this talk about IMF obviously exiting, etc, etc. There was no real clean pattern there from a bearish perspective, and that one could certainly go with or maintain with. But for now, you are back into the 200 MA resistance at the 4,900 level on the French CAC. Is there any real technical pattern here? I mean, we can potentially, I mean, you could have connected those lines together there, diagonal pivot lows there, but no real pattern again. The only argument that one could make is that we were in this bearish channel here, and obviously we broke out of it. That's the only thing that you could argue from at this very current juncture. Okay, so falling contracting wedge pattern, and obviously we broke out, and given the fact that we don't really have any other key support or resistance level, to be honest with you, I can't see anything significant that I could refer to in terms of resistance or support. I mean, you could have a potential key resistance line there, but even that really doesn't have any basis, to be honest with you. This is probably the only one. Previous resistance equals support there on the French CAC. I mean, I could have take the pivot low here, connect it to a cross, but nothing of any substance again. That was probably the only trend line that we had, and obviously that broke. So again, we will be looking at this very carefully. I mean, you do have a potential here for a French CAC. I mean, you could take the pivot high from here, and we could potentially look at a inverted head and shoulders formation. Again, circumspect. It will all depend on what the news flow comes out in terms of Greece on Monday, and then we'll have to react accordingly. But I mean, it's very hard to time moves like this, as you can see here. I mean, you've got a pivot low of 4785 to 5020, then 5020 to 4860. I mean, these are just monster moves, and again, support resistance is being absolutely butchered here. It literally is being disrespected. There's no respect whatsoever to support and resistance, which again is a concerning sign. Okay, so go back to our levels here, just open and close, and that's all we're going to be observing for now. But again, we've broken out this falling contracting wedge pattern. There is talk of a potential Greek resolution deal in the works. The IMF are back on board. So yesterday or overnight's data in terms of being bearish is certainly no longer the case from my perspective. Okay, so certainly a bullish scenario going into Monday from that perspective. Okay, so the Euro stocks, this is again another indices that I generally tend to observe. So bring up the Euro stocks. A very similar pattern, a very similar pattern, as you can see. 10 minutes falling contracting wedge, daily chart again into support. Obviously we've bounced off that pivot low here, previous resistance equals support, so again looking for a potential thrust and a move higher. Now the actual FTSE 250 and the Euro stocks 350, let me just quickly observe them and show you them as well. Bear with me. FTSE Europe again inside bar, so from my perspective that is classed as a bullish consolidation, given the fact that we've had a bullish engulfing candle. We are looking to target the gap fill above, so for my basis that certainly is bullish. FTSE Europe, CAC is here, and I think that's a wrap, folks. Ah yes, FTSE 100, how can we forget the FTSE? Okay, daily chart of the FTSE, or should we say weekly chart of the FTSE 100. Again, that pivot low support at 6727 again will hold us very important. The 250 MA will be important going forward. Previous obviously resistance here equals support, again has held, so again that's important. That is a very important support zone for the FTSE. Very unlikely, unless obviously Greece exits, that will actually get broken. Okay, daily chart perspective, we've got the 200 MA that's certainly held again. 6758 was a pivot low. Obviously we were holding this 60 or 38% fib, etc., and that certainly needs to be respected. We obviously still have lower lows and lower highs on a daily chart perspective, so again, you know, it's innocent until proven guilty, as they say, and that's basically the scenario situation that we're in at present. Okay, innocent until proven guilty, so we are still in a downtrend, and one must always remain open to 6,700. Obviously a new lower lows, lower highs being obviously on the card as well. Now if we zoom in and go to a 60-minute chart of the FTSE 100, I was expecting this right shoulder to come into play, especially given the fact that Mr. McCafferty today was obviously sounding very dovish from my perspective and my interpretation. That certainly sounded dovish, although the French, also given the fact that the economic data in terms of the construction data out of the UK did post a slightly better picture. I mean, if we try and interpret, I mean, although the economic data itself was, from my reading, let me just quickly go back and recap and make sure that I'm giving you the correct information here. From what I understood, the economic data itself was bearish, but the interpretation of events, or there was a certain number economic data, Britain's economy grew faster than I previously thought in the opening months of this year, according to the Office for National Statistics, after it emerged that the construction sector had a better start to 2015 than forecast. Okay, so after it merged, the ONS says construction was not such a big drag on the wider economy in the first quarter of 2015. As a result, economic growth was probably 0.4% rather than 0.3%. So obviously bullish. All of the things being equal, stats said. Okay, so oil prices, slip, Royal Mail obviously was higher. Postal Service fell for added 2.8%. Focus on research. So government officials said on Friday, counter Athens needs a deadlock to deal. Blah 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 blah. Let's just bring up that economic information in terms of. Okay, so the construction data. Okay, so Britain's economic growth last year stronger than previously thought. The pace of growth and gross domestic product could rise to 1.5%. Reading of GDP is due, and construction makes up 6.5% of Britain's economy, etc., etc. Okay, so ONS said the construction output in the first quarter was revised to show a fall of 0.2%, a milder decline than a fall of 1.4% previously reported. So, interpretation of that was fairly bullish. Okay, so I think the most important thing is the McCafferty speech. Okay, Mr. McCafferty, his interpretation of events, or it's his speech that was given was certainly, my interpretation was certainly dovish. So I expect the right shoulder to hold around the 50 to 61% fib. That obviously wasn't the case. As you can see here, the FTSE went as low as 75% fib. So again, I mean, according to Mr. Bulkowski, those that are into technicals, certainly visit the patternsite.com. And from my understanding of technicals, if you hold a fib 75% the right shoulder, inverted head and shoulders, then it's certainly valid. But having said that, it certainly is a very weak inverted head and shoulders formation. Okay, so although I'll still accept it for it to be true, I'll interpret it more as a higher low as opposed to obviously an inverted head and shoulders. Ideally you want to see a 38-50% retrace, and then that certainly gives legs to the actual recovery or reversal. So again, certainly weakness, a lot of weakness from the FTSE's perspective, but again we'll see exactly how the markets play out on Monday. Obviously if we see a Greek deal, we could see a 100-point gap up on the futures market very, very easily. So again, that certainly needs to be taken into consideration. Okay, so your FTSE 100, if that fib 75% support were to go, you are looking obviously then at 6735, but given the fact that the weekly chart has a solid support at 6735, I certainly expect that to hold unless some major obviously announcements such as a Greek or Grexit obviously occurs, and obviously that will break. So you do need a very important catalyst. Okay, a 10-minute chart of the FTSE 100. Again, I was expecting this downward falling contracting wedge pattern to actually reverse, and we did have previous resistance equal support as well. All of that obviously didn't hold. None of that certainly came into equation, given the fact that the emotive sell-off certainly took hold. You have previous resistance equal support here, so again that certainly holds. You don't have anything else other than the fact that you have a potential for inverted head and shoulders formation. You could take the pivot high from there, connect it across, and you could certainly get your trend line there. Okay, so although having said that, you'd probably get a better trend line intraday rather than taking something from the day before. So if I just take those pivot highs, as you can see, that's a better matchup. From my perspective, you are looking at a again, I mean, you've got this trend line here again, so you are just about holding in terms of the actual price action for the FTSE 100. Let's just try and clean things up here. Obviously you had this gap level, and that gap level certainly held true. Let's just get rid of that as well now. Certainly no longer playing any real decisive action in terms of price. All we have is this for now. You have an inverted head and shoulders formation, so your left shoulder, your head is already in. You've got the right shoulder now potentially brewing, and then obviously a reversal, and that's exactly what I'm expecting going into Monday's price action. Okay, so Monday's trading, so you've got a pivot low here at 6760. Your neckline is at 6800, so I'll just draw that in now. So you have 6800 minus a 6760 on the 10-minute chart. You're looking at 6840 target on the upside. So that's basically what I'm expecting, given the fact that we do have a resolution towards a Greek deal. You have this pivot high here. Again, that will come into play. You've got a pivot high here at 6850 that will come into play. You do have previous resistance equals support, so I always respect that from a technical perspective. And that's the FTSE 100, folks. Now you do have resistance here also at 6816. Again, that certainly needs to be obviously respected, given the fact that we held that level twice. And that's the scenario with regards to the FTSE 100. Now we can cross-reference that with the FTSE 250. The FTSE 250 in the weekly chart again it still remains in its bullish channel, so expect that rally to certainly continue. You do have a potential for a high HNS, although it is weak and it is something that's hypothetical. For now, I'm going to adhere to this diagonal trend line, which obviously is coming from below, up from October 2014. So again, that's certainly been respected. The FTSE All Share, bring that up for you as well. FTSE All Share obviously holding this resistance zone, so both holding resistance. Okay, so two resistance zones holding, support zones holding. So therefore, would it be interpreted as bullish for the FTSE, provided the scenario holds with regards to the Brexit situation. Okay, the actual chart of Brent, I can quickly whip up or quickly bring up some analysis for Brent. Okay, so given the fact that the FTSE is obviously heavily reliant upon commodities, the price of Brent obviously was under pressure today. As you can see, bring up a chart, we obviously sold off quite substantially. Bring up the 4-hour chart, and you are coming, obviously we held this resistance level here for Brent. We have sold off quite substantially. We've held a double bottom support at 61, obviously we're into 63, and there is a case there for inverted head and shoulders formation as well. Now bring up a chart of crude oil. With regards to copper, you are holding support on copper, which obviously is bullish for the FTSE 100. Bring up a chart of crude. We've obviously sold off again on here. Daily chart, we are holding that resistance zone. 60-minute chart, again you are coming into that support zone at 200 MA, so that certainly needs to be observed as well with regards to the price of oil. Okay, so it's a mixed picture here, folks. Mixed picture. 4-hour chart at the moment, we have obviously held that resistance level. The market's obviously sold off. Resistance certainly seems to be at 61.70. We are into 200 MA on the 4-hour chart, so that certainly needs to be respected as well. So let's see how the market plays out. Obviously the Asian market certainly were higher overnight, so that should be interpreted as bullish and a risk on scenario. Okay folks, so I think that's a wrap in terms of the actual analysis and talk on the market. So again, it's all about Greece. Greece will dictate sentiment, and if we get some bullish news out of the Greek situation going into Sunday Monday, then you are expecting a bullish scenario, given the fact that the technicals certainly are bullish. Intermarket analysis certainly is arguing for a bullish scenario, so therefore that's the expectation that I have as well. Over the weekend, certainly be sure to visit cfds.com and certainly check out the services and the actual products and services offered there, and certainly open an account with them. They are a recommended brokerage from my perspective. Okay folks, so as always, risk on, risk off, wax on, wax off. Goodbye now.